Hey there, folks. Welcome to Craft Beer and Crypto. You have found your way to the premium side of JKJ Digital Assets, Craft Beer and Crypto. What we're going to do today in this video is we're going to look at some differences between Bitcoin, the US dollar, draw some real comparisons as to what's out there, and try to help you get a little better understanding, get some more details, get a little bit deeper into how do we take this crypto journey and grow this thing and enable everybody to have a better life. That's one of the really exciting things that we're all about at JKJ Digital Assets. Continue to come visit us at jkjdigitalassets.com. And we're going to move forward now. We have John Hull. We have Javier Garcia. We are so excited to be here with you today. And again, we just want to be able to go ahead and jump in. We've put together a PowerPoint presentation. We've got some good talking points that we think are really going to be educational and some things that are going to matter to you as we move forward. So, John, would you like to go ahead maybe and jump in? We can start to look at some of the different dollar comparisons to Bitcoin comparisons. What have you got for us today that you want to start off with?
Yeah, you bet. So we put together this PowerPoint. This is our launching point. There's some things in here that are really baseline to understanding crypto. We use Bitcoin in this presentation, but you really could insert any other cryptocurrency into it, and I'll discuss some of the differences as we get through it. But Bitcoin is just an easy one to do. So let's just get started. The bottom bluff, just in case you're not a military person, is bottom line up front. We want to identify and show some of the inflationary comparisons between Bitcoin and the dollar. We're all feeling inflationary forces happening right now at the grocery store, at the gas pump. But the one thing to point out, and we can all also see that Bitcoin has a lot of inflation that is happening with it. I mean, a year ago, Bitcoin was about $18,000. Today, it's more in the range of almost $60,000. So it kind of is the definition of inflation. But the point being that with the US dollar, the inflationary forces cause a decreasing purchasing power at your level. You know, when you're in the grocery store or wherever, you can see that happening. So Bitcoin, its inflationary gives you increased purchasing power. So, let me demonstrate that a little bit. Go ahead and click to the next slide.
So with that, there's good inflation and there's bad inflation?
There is, yeah. Especially when it comes down to your pocketbook. If you want to buy something, it does matter. So this first slide, if I want to lay out what would be like every dollar in the U.S. economy, if you laid it out ledger style, this is what you might see if you were going to take an accounting of every single dollar that's in the world. It would go from $0 all the way down. So click next once. So our dollar is divisible by 100. That would be commonly referred to as a penny. So you can have $1.12 in our economy. So click again, and you could extrapolate that all the way out, for all the money that we have. $1 billion all the way. Each one of those $1 billion is divisible by 100 with pennies. So in our economy right now, there's over 50 billion physical notes. You know, that's dollars and quarters and $50 bills, $100 bills, and they all total over $2 trillion of our economy is floating around, hand-to-hand exchange around. We'll back up one, two. There you go. So there's also, in addition to that, we have a Federal Reserve. So Federal Reserve it's accounts that are sitting in select banks around the country. Like we all remember back when they said too big to fail, and we bolstered all the banks back up again when the economy fell in 2008. The reason that they're too big to fail is because they hold the Federal Reserve dollars in it. All the Federal Reserve dollars are not sitting in a bank in Richmond or a bank in New York. They're spread out across all of our banks in America. But there's about $8 trillion in that. So the very basics of inflation or deflation, because deflation is a thing. We don't talk about it too much, but deflation is a thing. So at the point of purchase, the cost of your products or services, if they're obviously going up, it's inflation. If the cost of products or services are going down, that is deflation.
So is inflation always bad, or is deflation always bad, or?
Well, that's a great question. Inflation is, we're going to see here in a second, that the inflation is a good thing.
It depends who you are.
Yeah, well, that's a good
It
point.
depends who you are, what side of the court you sit on. If you
What does that
are a regular U.S. citizen out there that has a job and you're working for a living, it's a bad thing. If you're the U.S. government, inflation, if you are printing dollars at a cyclic rate, then it's a good thing, right? Because now you're able to pay your debt with cheaper dollars. So again, it depends where you're sitting, right? If I'm the U.S. government and all I'm doing is printing money, then I'm able to pay my debt with cheaper dollars. So
their policy of printing money actually helps to pay off the debt for them, or makes it easier to pay off.
It makes it easier to pay off. It's a juggling act, right? At the same time, you don't want your citizens to be paying dealing with an incredible amount of inflation, but at the same time, if you go heavily in debt, which is what our government's done, you get to a point where maybe we start getting into these kind of conversations where what are we doing here, right? What are we? What's
right.
how do we slide out of this? But let's get back into the whole inflation deflation because that's a topic.
We're going to come back to that, Kevin. That's a fantastic question. We will get to
that's
it.
That's a rabbit hole.
No, I do want to talk about that stuff because it matters, and it matters in the conversation of cryptocurrencies, in our dollar. So it does matter. So click back over to the thing. So when we're talking inflation or deflation, the major factors that we're talking about, full disclosure, if you were getting a master's degree in economics, it probably would be more factors. But these are the basic ones that we feel as consumers out there. We feel these things. One of the factors that affects is monetary factors. The amount of physical currency that's in the system that we're passing around to each other, that can go up and down, and the federal government does throttle that up and down. They throttle it up and down for reasons like a $20 bill can wear out. That's a thing, so they have to. There's a certain amount of attrition that happens. People burn money literally. They lose money. They throw away pennies. They do all kinds of things. They're constantly adding or taking away from our physical currency. But what that does add to the amount of money that's rolling around in our economy. And they just talked about this in the news a couple weeks ago. I believe it was that Biden wanted to create a $1 trillion coin and or $1 trillion bill, that you could put into the system. Because if he did that, if he were to stamp out a $1 trillion coin or print out a $1 trillion bill and you throw it out there, it's all of a sudden can be circulated. That is money added to our economy, and it's just I don't want to say a cheater way, but it's kind of a cheater way. If there's nothing behind, if you don't have $1 trillion sitting in an account and you print $1 trillion bill or coin, you just magically made money go in the economy. But that's one of the things that we can do.
Well, Joe, if you want to do that, President Biden, I'm more than willing to hold on to that $1 trillion bill. I will walk that bad boy around the economy. You come to me, I promise you, I will take good care of it. You just send it to Kevin. I got you.
That $1 trillion.
I got it. I got it.
All right. So another thing that we're all familiar with the next one is the amount of money in the Federal Reserve. So that can be throttled up and down. So down would be us paying our debt off. That would be moving the amount of money in the Federal Reserve down. But the opposite is taking on more debt. That's adding money to our Federal Reserve. They literally put bonds out there and people can buy them. Unfortunately, we sell a lot of bonds to China. So that can go up and down. That's adding money. There's another one. This is an interesting concept. It's called the velocity of money. Velocity of money is the how much we are cycling the two cash that I just mentioned above. How much that's cycling around. If you're spending dollars in our economy, that's moving around. The same dollar can be spent, infinite number of times every year. So, but the thing to take away from here is that the government can do things to encourage the velocity of money. If they raise interest rates, then you will be encouraged to put money in a savings account. Stop moving it around our economy, put it into a savings account. They can go the other direction, which we've all seen them do. There's a term that you might hear in the news called quantitative easing, where they're adjusting the interest rates and trying to get people to take on debt and put more money into the economy. That's ways that they can adjust our economy. So moving on, the supply and demand factors are more obvious. People understand these better. There's consumer demand. If we are out there spending more in the economy or spending less in the economy, that affects inflation or deflation. The cost of doing business is what it costs. If you're a restaurant and the price of beef goes up, that costs you more money to do your business. And then there's also, the same as there's a velocity of money, there's velocity of products. And the velocity of products is how much we're selling. Like if you make a widget and it sits on the shelf for 2 years before you sell it, as opposed to if you make Beanie Babies and they fly off the shelf, that is the velocity of your products. The economy will get boosted if your products are flying off the shelf, and it'll decline if you have the widgets that are not selling. So, and the last factor that we have is consumer wages. That's the one that we all feel most directly, because we all want to make more money. But the trouble with this, and we have the arrows floating in all directions, that all these factors affect each other. If consumer wages go up, then it's very likely that the cost of doing business also goes up. If your consumer wages go down, then the velocity of products goes down, or the velocity of money goes down. There's all these things are interrelated with each other.
So everything has an effect on something else in this whole circle of what goes on within the inflation and the economy and everything. So like when I hear people say, well, we should just pay everybody $15 an hour, or we should pay everybody $20 an hour. Right. That's great, but does that mean that my hamburger at McDonald's is now going to cost me $7 instead of $4? Or
100%.
Okay.
100%. Great. Or milk is going to go up, but there's all kinds of things that make it happen. All right, so all those things, we mentioned the monetary factors, the supply demand factors, and wage factors. So our government measures this in a number that they get called a consumer price index. I don't want to get too much into these things here, but the consumer price index is basically they call it a cart of goods. So the government has people liken it to a shopping cart. There's a cart of goods. It's things like milk and eggs, and there's a bunch of things that they go into this cart, and they look at the cost of them, and they get a cost for that, and they measure it from month to month and year to year. How much does it cost to buy that cart of goods? And
so it's just like everything that I need to live day to day.
Not necessarily.
Not everything?
Gasoline, the price of heating up your home, the things that actually do pull money out of your pocket at a greater rate, depending on where you work, right? It's great that you measure it with a loaf of bread, but no.
That's not the only thing that we use to measure our innings and outies in our bank account.
Okay, all right. So the CPI cannot necessarily reflect exactly what the real world number is.
Exactly.
So they could almost play games with that number?
Yeah, exactly. They can pick and choose what goes into that number. We're all seeing the gas prices have gone up $1 or whatever, over the last year. That's not in the CPI. So the cost, the electricity in your house, things like that, those fundamentals that mean so much to us as a consumer, they're not necessarily factored into that. So they can fiddle with those numbers. So go ahead and back to the PowerPoint. I put the formula for inflation or deflation on there. It's pretty understandable because it's last year's consumer price index compared to this year's consumer price index, and then they get a percentage number out of it. So, it's 3% more expensive to live this year than it was last year. Okay. That's what that number means. So if you're an economist and you do have that master's degree in economics, you would understand, or you would tell people that a 2% inflation is the sweet spot for a growing economy. That's what if you were trying to grow an economy and, make everything, wages go up and price of goods go down, the 2% inflation is what is most ideal for that situation.
Okay.
So now I'm going to tie this back into our crypto, because this is where we all started out with. So with US dollars, these monetary factors that we wrote here, these are the levers that the government has to work with our economy. These are the things that they can add cash money to it. They can take on more debt, and they can do things to encourage the velocity of money, or how much we're out there spending our money. And these things change. If you go from a president that maybe is business friendly and wants to grow the economy, They may adjust these monetary factors to their, to match their likes or maybe what they ran on when they tried to get their office. Somebody who's not so good for business, maybe they have other drivers in their mind. They will tweak these things differently. So, and it's obvious right now. I mean, you can't hide the fact that we are in a hyperinflation mode in our world right now, and it's we are doing lots of things to print money, and all of that. I use print money in air quotes. That's not it can be a literal thing. They can literally print money, but it also can be taking on more debt or issuing more bonds or adding more zeros to a bank account in the Federal Reserve. But all of those things, these levers that the government can pull right now are causing the dollar to be devalued. Inflation is going up. It's way more than 2%. So click through to the next one. All right, so yeah, if you add money to the economy at a rate that outpaces what the economy is doing right now, it will cause inflation, which is a decrease in your purchasing power. So, and then I put the infinite symbol down there for dollars because there really can be an infinite number of dollars right now. We have somewhere $12-15 trillion in our economy that's moving around, but that is not limited by anything but our monetary policy and people's likeliness to take on our debt. If our economy the inflation runs too hot, there will be a point where even China won't buy our debt, and that number is infinite. Click back over if you don't think it's infinite, you can go to a webpage called usdebtclock.org and watch it roll. There is tons of money that's being put into our economy right now.
Well, is this what we constantly hear about in the news? And when you hear like, what is it? It seems like now every 6 months, but maybe it's once a year, where the threat is that they're going to shut down the government because the debt ceiling isn't raised and things like that. That all ties into how much money they're printing and what's available, right?
It does, yeah, it absolutely does.
Okay.
So click through once. All right, that was a lot of boring stuff to demonstrate something. So let's lay out Bitcoin. Did you want to say something, JD?
No, go ahead.
Okay. Let's lay out Bitcoin ledger style, and we'll put it right next to US dollars as a comparison. So click one time. So where the dollars are divisible by 100, Bitcoin is divisible by 1,000,000. So each Bitcoin, you can chunk it up similarly to a penny. You could have a 1/1,000,000th of a Bitcoin that's available. So click one more time. All right, and you could do the same thing. You could extrapolate this out. This one is really notable because if you represented every Bitcoin out there and then every single, click one more time, Susan. There only ever be 21 million Bitcoin. That is built into the schema of Bitcoin. Give me one more click. So if there's 21 million Bitcoin and it's divisible by 1,000,000, that means there's 21 trillion individual pieces of Bitcoin that will ever be available for purchase or trade. And that, the way you see it here, it's laid out ledger style in a ledger. We're going to, come back to this later on when we talk about things like blockchain and everything. So every single little individual piece of Bitcoin is in a ledger somewhere.
Got it.
As it's made and released into the system. So speaking of that, right now there's about there's probably a little bit more than that, 18.5 million Bitcoin that have ever been mined that's available. It will go to 21 million. They release it, as time goes by, they release more and more. All right, so taking this, I want to bring this airplane for a landing here. So the big things that we took away, the US dollar has the monetary factors that affect it, and they're controlled by our government. They cause inflation and to go up, which means a decreasing purchasing power. So if you contrast that to Bitcoin has a fixed programming schema that is, once it was started, I think it was in 2006 or so, and it started rolling on, it is untouchable. It cannot be adjusted. There's a few things that affect it, that like the velocity that we're mining it and everything like that. But when they're adding it to it, like we're adding to it at a rate of about 6.25 Bitcoin every 10 minutes. So the only things that can affect the inflationary features of Bitcoin is how fast that they're dropping it in, which is fixed by their programmatic nature of Bitcoin, and then the velocity of our trading. So, and that's if we're trading Bitcoin a lot, if people are really hopping on it and buying it back and forth, it's like any other asset out there. If you're buying it, the price is going up. If you're selling it, the price is going down. So,
well, interesting.
A lot of information there in terms of inflation, and when we look at the dollar and Bitcoin. But why are we talking about this? Why is this a point of discussion at all? Every time you turn on the TV or you listen to the radio, you hear another talking head from government side of the house telling you that cryptocurrencies are either a threat to our currency. It doesn't matter whether it's here in the U.S. It could be anywhere worldwide. So the more information you have to back up what we're doing here, the more you understand why we're investing in this here. Why would I want to have $100 in a savings account or $100 worth of Bitcoin in my wallet? What would be the difference there? So as investors and taking this ride here, this journey that we're going on in cryptocurrencies, it's important to understand all that stuff so we can just push aside the disinformation and invest smartly.
Well, the motivation of the players involved matters also. I mean, the government, JD was alluding to, and we never came back to it, but the government is taking on debt at a massive rate. And we all look and go, well, why did, our government make this move or that move? Or, they handed out, they continue. Here's a good example. They continued all of the unemployment benefits way past when the economic indicators said they should.
Right.
And, that was putting money, our government took on debt to take that money and immediately hand it into our economy, and they extended it further than it should have went. And you're like, why did they do that? We were all looking at this going, we're so in debt. Why are we taking on more debt and putting it into the economy? Well, if you take that, that's one example of them adding money into our economy. If you take that and you look at the debt that we already have, if they can cause inflation to happen and a decrease in our dollar to occur, it becomes easier to pay that debt.
Yeah, devaluing the currency.
You devalue the currency. It's much easier to pay the bill on that debt that we have out there. So, and then you mix that in with whatever political party's in power. If you mix it in with their agenda, you start to get an entire picture. Like, of course, they want to discourage you from buying Bitcoin, because with Bitcoin as as an economic feature, as a money or a monetary unit, they have no control over it. They can't take that and turn the heat up or turn the heat down and tweak these things for their agenda. It is the agenda. It's running a schema that's running since 2006, and they can't control it. So, if as investors, like JD was talking about, it's important to understand these things. And maybe, if you have a 30% inflation, then if you had $10,000 sitting in a bank account, it's 30% less now. When you not that there's 30% less sitting in your bank account, you can buy 30% less with it.
Purchasing power, yeah.
Yeah, but as opposed to Bitcoin, if Bitcoin's gone up way more than 30% in the last year. If you had $10,000 sitting in Bitcoin and now it's currently worth $13,000, that's good for you. Your dollars are worth 30% less. Your Bitcoin's worth 30% more. It's easy to see the motivations behind this.
Well, that's really interesting to kind of get that perspective on it, and hopefully everybody out there that's a member that has access to these videos, hopefully we've been able to teach you something here, give you a little bit of perspective, and let you understand kind of why some of this stuff happens. So again, thank you so much for being a premium member here at JKJ Digital Assets. Go out there, folks. If you find some value in what we're presenting, go out, tell your friends, let everybody know that, go out to that pay site, that we like to have a good time. We like to talk about a lot of different stuff on the free podcast that we put out there. But this is where the meat is on the bone. This is where you're really going to learn things that are going to help you to put money in your pocket. This is where we're going to teach you how to protect assets and how to grow assets. And that's what this is all about, bringing it to the public, letting the common everyday person like me understand how does this stuff affect it. Folks, again, thank you so much. We're going to wrap this up. John, JD, great job as always. So much information there. I know all of our members really appreciate that. Fantastic job. So folks, again, come out to jkjdigitalassets.com. We know all of you are members. We know you come and visit that site. Tell everybody you know. Get folks driven that way. Help your friends out. Help your family out. And folks, we will see you next time. Thanks so much for being here.